Saturday, March 10th, 2018, Monaco 64, home of alternative economics and contrarian views. So I want to look at some charts today, and especially silver. I've just realized, silver has been range trading in such narrow ranges for almost 2 years now. And it's not a normal state of affairs. And looking where we are also with the gold silver index, I think we could see some explosive moves in silver coming up soon. Is it in a few weeks, months, or next few days? I don't know, but I don't think there's much more downside to silver. I think silver is completely oversold, very cheap, and especially looking at the bond markets and like how yields are going up and how the Fed's expected to raise rates. So yeah, we'll look at different markets, but I want to focus on silver. Let's start with the dollar index. Dollar index has held up here. It's trading around the 90 level, below the 50-day moving average. The trend still seems lower. So yeah, we closed just below that 50-day moving average. We need to get back above 91, I would say, in the dollar index if we wanted to see the dollar index go higher. Could we get a stronger dollar and stronger precious metals prices? Of course we could. That's happened in the past. So it's difficult to say here whether we've got like a medium-term bottom or a consolidation. To me, it looks like a consolidation, but uncertain. So let's have a look at gold now. The gold chart. The interesting thing about this chart, it's a daily chart going back a year. You can see there's like a flag forming there. That's bullish. I made a video about a pennant, but you can also draw it as a flag. We're still within that consolidation. And I did a Fibonacci retracement study here. And notice how we're just stuck here now around this just above the 38.2 retracement, which is 1315. So we closed at 1323 yesterday. So that's the gold chart. As I said, I still think we're due to go higher in gold. I guess that would mean maybe that the dollar will go down, but you never know with markets. You can only do your best and see, work out the probabilities and read the tea leaves, so to speak. So yeah, it looks to me like, we could still be under pressure a little bit, even if we go down towards 1300. We're still within the flag formation, and it looks like right now there's good resistance as well around the 1335 area, just around there, and 1340 for gold. So now silver. Silver is looking very interesting. First, I'll show you a short-term chart, a one-year chart. And if you look here, since the beginning of February, we're just stuck around this range here between basically 1635 and 1685. So that's very, very narrow range for silver. I remember years ago when traded silver futures for clients, you could see silver go up 2-3 cents in one day. Back in like 2007, 5, 6, 7, that kind of era there, 2011 as well, of course. But now it's like we've been stuck for a month in this really narrow range in silver. And then if you look at a longer term chart, going back 2 years, look at from the end of 2016 till now, we've been stuck in like virtually a $2 range, 16 and 18, and it just looks like there's no momentum anymore in silver. But in my opinion, it could be ready to go to the upside. And why do I say that? Well, because gold looks fairly positive. The dollar doesn't look great. And looking here at the gold-silver ratio, we are at level, this chart goes back to 2001. We're at extreme levels here from where, in the past, silver has actually rallied and outperformed gold, and both the metals have gone up. I think the ratio closed just below 80. Yeah. So this is pointing to outperformance of silver, and that usually happens in the precious metals bull market. Yeah, the fundamentals as well are looking interesting, as I said earlier, with inflationary pressures starting to show. And by inflationary pressures, I mean it's starting to show on the consumer side because, the Federal Reserves and the central banks, they've created already so much inflation for the last almost 10 years by printing money. But that money had only gone into financial assets, stocks, bonds, stock buybacks, derivatives. But now it's starting to seep into the real economy. And bond markets don't like that. Precious metals are a way to protect yourself against that. So before I look at the 10-year yield, which is really interesting as well, let's quickly look at the Dow. Of course, had a great day yesterday after the Goldilocks number from the jobs data, which was a huge, increase in non-farm payrolls, over 300,000. It was expected 200,000. The hourly earnings, average hourly earnings were under control, so to speak. But yeah, I've been speaking a lot about this 61.8 retracement of the correction we had earlier this year. And it looks like we're, again, those Fibonacci levels are not bad, not bad, how can I say, markers of where the market can trade. So we're right near we closed just below that 61.8 retracement at 25,335. The 61% is 370. I know we traded above that level recently, but difficult to say what the Dow is going to do as well. I think, the drop we've had in the stock market is a bit like the big drop we had in cryptocurrency since December. It's going to take a while longer for the markets to work out things. I don't think we're going to see a new high anytime soon in the stock markets. So now to the 10-year yield. And the 10-year yield, of course, is the inverse of the price of the 10-year. And the reason why the 10-year yield is so important for all financial assets is because it's the supposedly risk-free rate of return. And the reason, it's called risk-free is because the U.S. government technically cannot go bankrupt. They can always print paper money, the dollar, to pay off debt. Of course, the more they print, the more it loses value. So this 10-year yield chart goes back to May of 2013, January 2014. That's the key level there. It's around 3.04%. That's the level to keep an eye on now. Earlier this year, let's see when it happened. Oh, actually, it was just in the end of January. We were keeping an eye on the double top there from the end of 2016, middle of and beginning of 2017. That double top was around 2.63% yield. I made a lot of videos warning about that. We broke out of that level end of January. And that was quite significant. And notice how we've spiked higher since then. We got up to a high of 295 recently. The 10-year yield, that was 26th of February or thereabouts. And right now, as you can see by the chart here, it looks like we're consolidating. It's like a little bull flag in the 10-year yield chart. And on Friday, we closed just under 290 at 2.896, even though the hourly earnings number were under control and lower than expected. I think the bond markets are a little spooked that the job growth is so large, even though, these numbers are hypothetical, and I don't think the job, how can I say, the job situation is as good as it is, but the markets and, that's the way they look at it. The mainstream media, mainstream economics, mainstream banks, they buy into this story that the economy is doing well. So we could actually, it looks like it wants to break higher. So I would say the key levels are 295 on the upside, 3% because it's a round number, but really 304. So that's why I think maybe we're set for a big move in silver. Maybe people are going to start getting more concerned about inflation. So that's the technical picture for these major markets. And as I said, it looks like silver could be the next big thing. It's been very, very frustrating, of course, for quite a few years. Silver topped before gold in 2011. I think it was 2010. It topped at $50. It topped at $50 as well in 1980, and we're still trading with a 16 handle. It's very undervalued. So what do you do as an investor? I mean, for the stackers, they just wait. For speculators and traders, well, buy some way out of the money calls in silver. Why not? That could be, you don't really have that much to lose. Of course, you can lose the premium if it doesn't move, but you only bet what you can lose. It's not like buying a futures and or going short. So that's where I see things. Let's keep an eye on the markets next week. And if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on steemit.com and on Twitter. And I wish you all a good weekend, and I'll talk to you later. Bye.